Welcome in. You're listening to another daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, I just want to start off by asking you a general question. I already asked you this off mic and I quite enjoyed your answer, but what are your comments about tax loss selling now that we're coming to the end of the year and there are a number of people saying that, you know what, tax loss selling might weigh on some of these stocks?
Well, my question is, who has losses in these stocks? I mean, if you're looking at, it's been a great year, I think, for most stock markets. Even though the miners have kind of underperformed the metals, if you've been a good stock picker, you probably have a lot more winners than losers. And tax loss selling, I mean, with respect to gold and precious metals, that made a lot of sense 2013, 2014, 2015, because coming into this time of year, the trend for the year was clearly already down and losses were already evident and you were in a bear market. Whereas in a year like this, I mean, just go back 1 month ago, I don't know how much GDX or GDXJ were up on the year. I'm going to guess around 10%. And now they drop a little bit more. And I'm hearing comments about tax loss selling. I mean, where are the losses? I mean, this is not 2013 or 2014. Now, there probably can be some isolated cases where if something had a really bad year, people are dumping that. But I've heard the argument. I just think it's fairly insignificant in this particular year. I mean, you might get a little bit of selling because of that, but tax loss selling is really a big deal in bear markets. And you can debate whether we've been in a bull market in precious metals because we haven't taken out the 2016 high. But I mean, we're certainly not in a bear market. So I don't see any credence to that as far as this year. If it is something that's going to have an impact, it's very, very minor, at least this year.
Okay, so again, yeah, maybe more of a bear market factor, but hey, sometimes some people do kind of rebalance their portfolios. Let's again, though, talk about gold and the precious metals in general. Silver was moving up fairly nicely early on this week, but has since turned around. Gold is looking like it's going to put in another down week this week, trading as we're recording this right around, let's say, 1280. It's still not breaking down, but again, it's still not breaking out. And much of this maybe speaks to our ongoing narrative here that we just don't think much is going to happen through the end of the year.
Yeah, I would agree with that, although I do have a downward bias through the end of the year. Looking at the dollar, I mean, well, let's go back for a second. Coming into the previous week, the miners were showing some good relative strength. The advanced decline line was healthy. The miners were leading gold. And then, of course, last week you saw gold and silver, I think, climbed around I think maybe even 3% with respect to silver. Yet the stocks did absolutely nothing. I think silver stocks were up only 1% and silver was up 3%. GDXJ was flat last week when gold was up, I think, 1.5 or 2%. GDX was up, fractionally. So even though there was some hope that the rebound could push a little bit higher, I mean, it crapped out really quickly with respect to the miners, even as the metals were gaining. And then, of course, to start this week, we saw a big sell-off on Monday in miners and the metals. And so I don't see anything that's bullish here. And with the stock market continuing to hit records and showing a lot of strength, and with the dollar at least in a oversold bounce mode, I just don't see what is going to drive precious metals, at least drive buying over the next month or two. And so that concerns me. But as I said in the last interview we did, I think, which was 2 weeks ago, even though I foresee some downside into year end, it's nothing to get really that concerned about, nothing that significant in my opinion.
So, Jordan, it may sound contradictory, but do you think if, let's say, GDX pulled back to its lower Bollinger Band on the weekly chart, or really which sits at around that bottom that it's found a couple of times at around 21, that would be about 10% down from where we are. Do you think that could almost be beneficial to the markets to bring in maybe some people who are looking just for a trade, just for a value play on a range that we've been seeing this whole year?
I mean, it's an interesting question. I think certainly there's support at 21, so you would get a bounce there. I mean, it would, for me, it would depend on what I mean, GDX is coming down to 21, but how much lower is gold going down? I mean, looking at gold and gold's technical support, there's really two ranges to focus on. The first one is 1260 or slightly below it, so we can call it 1255 to 1260. And then the really important strong support is around 1215 to 1220. So if we see gold come all the way down to 1215 to 1220, and then GDX comes down to 21, I wouldn't be too concerned with that. I'd see an opportunity there because you definitely get a bounce in gold. Whereas I wouldn't want to see GDX come all the way down to 21 and gold be trading, in the 1240s or the 1250s. That would kind of be a negative sign to me, thinking that, well, gold maybe has a little bit more downside, and GDX, it's not certain if it's going to hold 21 or 20 or not. So certainly if GDX comes down to 21, you're going to get some kind of a bounce there. And yes, I would prefer to see that happen rather than not, because just looking at the very short term of the charts, they're really negative here. And I think we're probably going to see a drop lower over the next couple of weeks. And we'll see if we can test that 21 level. I would, my gut says yes. I think we're probably going to test it again, but that's just a gut feel.
Jordan, what are your comments to those people that are saying we need a market correction, some fear to come into the markets to move money over to the precious metals, because they like to argue that the U.S. equity markets and gold are inversely correlated, even though it's hard to tell on a chart that they are, or even argue that they are, considering, well, let's say the Dow has just gone straight up this year and gold has been pretty much range bound. What are your arguments to those people that say, you know what, we need a fall in the markets?
I completely agree. I mean, that's something I've been saying for the last 3 or 4 years. And with respect, I mean, the correlation between gold and the stock market, it's never constant. It's always changing. But generally speaking, a decline in the stock market is positive for gold unless prior to that decline, gold has been rising with the stock market, like we saw in the mid 2000s, where both were going up into the financial crisis. And we don't have that condition. I mean, we've come out of a really nasty bear market. We haven't even made a new high since 2016. The stock market has kept going higher and higher. And so there's a clear, I mean, it's kind of a nuanced thing, but there is a long-term negative correlation. And on the fundamental side, if the stock market were to correct and sell off, you would get much easier policy out of the Fed, and that would potentially drive real interest rates lower, which is positive for gold. So that's the fundamental explanation for why a falling market or even a correcting market would be beneficial to precious metals. And I completely agree with that. I think that's what we need. I mean, the precious metals the sector has just not been able to get going as the stock market has continued to push higher and higher. And remember, you go back to when precious metals bottomed at the end of 2015, early 2016. I mean, there was one rate hike, but then the Fed was on hold basically for an entire year, and you had inflation picking up during that time. And so you had real rates were going negative, they were falling, and that's what supported. You had positive fundamentals for precious metals, and of course they were extremely, extremely oversold. And when that happens on a yearly basis, you always get a massive rebound. So, I mean, even though they kind of trended together in the early part of 2016, I'm just pointing out why the weakness in the stock market helped precious metals get going. And, a replay of that, having the market, I mean, even just like a 10% correction, I think that would be very positive for precious metals, because the Fed would then back off their rate hikes. And if inflation kept rising slowly as it's doing, that would be very positive for precious metals. So it's possible if we get a rise in inflation to above 3% next year. I think that you would see the stock market would, if it didn't correct, it would start to slowly top out, and that would be positive for precious metals. That would probably be enough to push gold above 1,400. But ultimately, I don't think we're going to see gold. I mean, this is a big picture view, but I don't think we're going to see gold retest the highs at 1,900 or 1,800 until there is probably the next bear market in the stock market. I mean, yes, we can rise several $100s from here without a real bear market, but ultimately, if we want that really big, strong move and we want to go and break the 2011 high and make new highs. There has to be a bear market in the stock market for that to happen.
And that is really what we're waiting for. Something that I talked to Rick Ackerman about yesterday was, again, this internal rotation that's happening in the markets. Money just is not leaving the markets, and I think with still some of the easy money policy around the world, that money is finding its way into the U.S. markets, and until that changes, Jordan, I have to say, I think you're right, and I think that's what a lot of precious metals bulls are waiting for. But again, it's a good time to start to take some positions in these companies, these stronger companies, for when the turn happens. Is that your theory as well?
Yeah, well, my theory is right now, and what I've been saying is until it looks like miners and gold are going to make that massive breakout move. And let's be honest, when it happens, it will be a massive breakout move because you've been setting this up for 5 years. They've kind of been bottoming since 2013, 2014, and you have clear neckline resistance in GDX, GDXJ, and also in gold. And of course, in gold, it's 1350 to 1400, that area. So when that break does come, it's going to be massive. But until I think it looks like we're going to start that move, I'm being cautious and just trying to buy value, trying to buy when the sector is oversold. I'm avoiding optionality plays. I'm avoiding most producers because producers and optionality plays, those are companies that really, for the most part, they really need the gold price to go higher for their stock prices to go a lot higher. So I'm really underweight in those categories right now. And until it looks like we're going to get that breakout move, I'm a lot more focused on the exploration side and which companies are working on or adding value to deposits that it looks like majors will want to buy down the road. So it's really, I'm being cautious. I'm waiting for the sector to get oversold, and I'm looking at companies that are trading at a good value and have catalysts in the months ahead to add more value to what they already have. And so that's my focus. And I'm hopeful that sometime in the next 2 or 3 months, we're probably going to see the sector get oversold and we'll get another buying opportunity. So you got to do the research now and look at the fundamentals, see what you like. Then if the market sells off and there's some good values, then you can snatch those things up around the end of the year.
All right. Yeah, good comments, Jordan. I think you really do need to be selective, but when you see those stocks that you like go through a bit of a dip, not a bad time to at least load up just a little bit on them and ride it out for when that pop does happen. And again, focus on those takeout targets because those are going to provide you with the best upside. And in all fairness, I also think those can be some of the safer plays right now as we hopefully see a continuation in this bull market sooner rather than later. Jordan, thanks for spending time with us this morning.
Thank you, Corey.